On March 4, 2025, the world watched as President Trump once again wielded the power of tariffs, this time targeting imports from Canada, Mexico and China. These tariffs, a 25% levy on most goods from Canada and Mexico and an additional 10% on Chinese imports, sent immediate shockwaves through global markets. The Dow Jones Industrial Average plummeted, reflecting the uncertainty and fear gripping investors worldwide. This move marked a significant escalation in trade tensions, threatening to unravel the fragile global economic recovery. The announcement of these new tariffs came as a surprise to many, but it was a continuation of President Trump's protectionist trade policies. He had long railed against what he perceived as unfair trade practices by these countries, accusing them of taking advantage of the United States. Now, with the stroke of a pen, he had thrown the global trading system into disarray. The immediate impact was palpable. Stock markets around the world tumbled as investors reacted to the news. The Mexican peso took a nosedive and the Canadian dollar weakened against its U.S. counterpart. Businesses with cross-border supply chains braced themselves for disruptions and higher costs. The spectre of a trade war loomed large, threatening to undermine global economic growth. The tariffs were met with widespread condemnation from business leaders and economists alike. They argued that tariffs would harm American businesses and consumers by raising prices and disrupting supply chains. They also warned that the tariffs could lead to retaliatory measures from other countries, sparking a tit-for-tat trade war that would benefit no one. The Trump administration defended the tariffs, citing a need to protect American jobs and industries. They argued that Canada, Mexico and China had engaged in unfair trade practices, such as dumping cheap goods on the U.S. market and stealing American intellectual property. These practices, they claimed, had cost American jobs and undermined American competitiveness. In addition to economic concerns, the Trump administration also cited drug trafficking as a justification for the tariffs, particularly in the case of Canada and Mexico. They argued that these countries were not doing enough to stop the flow of illegal drugs, particularly fentanyl, into the United States. The opioid crisis had ravaged communities across America, and the administration claimed that these tariffs were a necessary step to pressure Canada and Mexico into taking more aggressive action. However, critics were quick to point out that the Trump administration's rationale for the tariffs was flawed. They argued that the tariffs would do little to address the root causes of the United States' trade deficit or the opioid crisis. Instead, they warned that the tariffs would likely harm the very people they were intended to help: American workers and businesses. Furthermore, critics argued that linking